Welcome to today's webinar, everybody, with Chainlink and Paxos. Myself, I'm William Riley. I'm head of centralized finance partnerships over at Chainlink Labs. Been at Chainlink over 3.5 years. I've led a number of initiatives, but in my current role as head of CFI, I get to work with fantastic partners in the space that have, core centralized operations, but are looking to decentralize their stack or engage with actions on chain, which has, led me to have a very fortunate and great relationship with the team over at Paxos and working very closely with Nick. So, Nick, I'll turn it over to you for introduction.
Thanks, and thanks for having me. I'm Nick Robnett. I've been at Paxos for a little over 4 years. I'm the head of asset growth and the head of services. I've been working with firms like PayPal, Interactive Brokers, Mercado Libre to launch their crypto offerings, blockchain and digital asset solutions, different stablecoin solutions, including very closely working a lot with PayPal on launching PYUSD late last year, which has been a big focus this year.
Excellent. Thank you for that, Nick. And, you know, um, I think we're both very excited about discussing tokenized assets today. But before we kind of get deep into the weeds, I want to just kind of start with the general landscape and the current state of tokenization. So, you know, um, let's start by, can you help explain us, what asset tokenization really is, and why should we consider it a significant development in the space?
Yeah, and I'll actually start with the why first because I think it's a really big deal, and there's a lot of projections about this, and increasingly we see the space is projected to reach about $10 trillion by 2030, which is going to be a very massive growth from where we are today, and I think that's really significant. And so what that actually means and what asset tokenization actually is just this process of creating a token on a blockchain that represents either a physical asset or a traditional financial instrument. And so it could be debt, it could be a security, a commodity, it could be real estate. The most common one that I think everyone knows is cash, dollars, or stable coins. And we see and expect that there'll be a lot more dollars that get tokenized, but also a lot of other assets that continue to get tokenized to help grow the space.
Yeah, thank you for that. And to kind of expand on that a bit, um, you know, you said there's a process for getting an asset tokenized. What does that process look, and ultimately, what does it mean when we say an asset is now tokenized?
Yeah, so I think that there's a couple different ways to look at that. The simplest part of this idea is really just that we mean that there's a token that is created and it is a representation of that asset on the blockchain. So if you're familiar with crypto, then like a digitally native asset like Bitcoin, a Bitcoin is a Bitcoin, the token is a Bitcoin. When you think about a tokenized asset, like to use stablecoin as an example, you've got this token on the blockchain, and really what that is just a claim to an underlying dollar. I'll just segue briefly here when we talk about tokenization, especially being from Paxos, to mention like the importance of regulation here just really quickly is that, you've got this token that is a claim on this underlying asset in tokenization. And this is where regulation really means that just like, is the underlying appropriately accounted for? Was it there before the token was created? Is it being managed responsibly? Are the token holders protected by well-established legal frameworks? I can have all of that. I digress, but I think that's an important part of asset tokenization. And then the other thing that I would say is that I think when a lot of people talk about tokenization, what they're actually really talking about is actually doing something with the tokenized version of this asset. And so an important point to really keep in mind here, and I'd say this even as like the token issuer, is that tokenizing is just like one step. It's sort of one layer in the process here. Most of the tokenization projects that I see in the space really they have a tokenized asset in them, but the project itself is about all the technology and operations that need to go on top of that to enable like a person or a business to actually use one of these tokens to do something. I mean, as simple as like putting it on a balance sheet or as complicated as paying a company in another country or settling some financial instrument. When we talk about tokenization, I think we actually pull a lot of those other concepts in beyond just like the actual asset of like creating a token version of some real world asset.
Yeah, that's super helpful. And what makes me really excited and us at Chainlink about tokenized assets is reducing that friction, making an asset more easily usable and adding utility to it, and ultimately streamlining things, creating this concept of a golden record of its existence, which is, in current state, pretty fragmented in the world of assets. Um, well, great. Now that we've kind of done an overview of what tokenized assets are, let's dive into Paxos in specific. Help us understand what's the overview of Paxos, and where do you guys fit into the current ecosystem today?
Sure, yeah. At a high level, just kind of like building on that earlier point, I think it's sort of important to recognize that there's a pretty wide range of providers and platforms in the space that are solving like similar, but also solving like, a lot of different problems. You've got asset issuers, custodians, you've got platforms that are providing different services. You've got asset managers, you've got trading desks, you've got hedge funds, you've got payments companies, like all of these people that are interacting with it. In terms of Paxos specifically, we are a tokenized market infrastructure provider. First and foremost, we are an issuer of multiple assets. What that means is that we do the technical work of creating the token version of the asset. And then we also do the like financial operation of backing the asset and managing the reserves that back those assets, like in the context of our stablecoins, under the oversight of our regulators. Secondly, for Paxos, as an issuer, customers often will come to us as the kind of primary venue to be able to create and redeem like the PayPal dollar or any of the stable coins we issue, but just using a specific example. And so that puts us in a position pretty naturally where we also have wallet infrastructure. We provide custody of those assets and the liquidity for allow people to move in and out of those. And then lastly, and this kind of goes back over the last few years and some of those customers I mentioned in my introduction, we have just like a strong like wallet infrastructure platform. So these companies like Interactive Brokers and PayPal and Nubank and Mercado Libre, they've built solutions on top of our infrastructure to allow their customers to interact with digital assets, to hold them, to trade them, to swap them, to move them around on chain. And so we provide those types of platform solutions as well. On the asset side specifically, you can see a lot of the stats up here. We issue 4 tokenized assets. 3 of them are stable coins. PYUSD, USDL or the Lyft dollar, and USDP or the Pax dollar. And then we have a gold-backed token called Pax Gold. We've tokenized over $120 billion of assets over the last several years, billions in annual transfer volume, and in and out of our custody infrastructure on the platform side. And so that's kind of just like a mix. It really starts with us providing these tokenized assets and then some of these like core infrastructure layers for the basic interactions with those assets is really where Paxos fits.
Excellent. Yeah, and an extremely valuable service in position to play within the space. And seeing these digital assets like USDL, PYUSD, USDP, PaxG, come on chain. It's very exciting for myself personally and us at Chainlink. And kind of with that in mind, Nick, walk us through how does Paxos and Chainlink, fit together? How does it work together today?
Yeah, yeah. And so a big part of putting these assets on the blockchain is that you kind of bring them to, and these are all like open loop, fully available assets. You bring them to the entire kind of like decentralized Web3 ecosystem. And a really critical part of us being able to do that is the partnership with Chainlink. The sort of like price feed, price oracle information that Chainlink provides. They do this for PYUSD, they do this for Pax Gold. That market data is just sort of a hard requirement for decentralized entities to have the source of truth that they need so that they can interact with these assets on chain on the different venues where they need to know what the price is at all times to create just secure markets so that they can really integrate these assets. And Chainlink is the one that provides that service for Paxos.
Yeah, thank you, Nick. And we're very proud to provide that high quality, high level security service when it comes to securing these markets and enabling utility for these assets. Um, well, great. Now let's look into the future a little bit. What is Paxos kind of currently working on? What's your latest innovations that you're aiming to bring or currently bringing to asset tokenization?
Sure. So, as I mentioned, we've got a big focus on tokenization. I think especially our focus is on stablecoin. We believe very strongly that tokenized dollars are going to be the first real mainstream wave of adoption in the tokenization space. And that's really where we're looking to lean in. And, I mentioned some of the stats. You see them up here again. We've been issuing stablecoins and Pax Gold for over 5, 6 years now. $120 billion of stablecoins issued. I think important that we are the only major stablecoin issuer with potential regulators. We're the only major stablecoin issuer whose stablecoin reserves are bankruptcy remote. And those things are important because they really allow us to access a part of the market that is used to those kinds of protections against their assets and their money. And so that's definitely where we're looking ahead to grow our stable coins and really establish Paxos. On some of the specific products, we've got the PayPal dollar. This is the PayPal stablecoin. It's issued by Paxos, launched late last year in August. It's over about $450 million in market cap. And we continue to work really closely with PayPal. They're integrating that product across their platform in a lot of really interesting ways. And with some of the recent launches, I think really excited about some of the new use cases we're going to unlock, getting that on a high throughput chain and so on. I think there's a lot there for payments and remittances and merchant settlement and so on. In 2018, or really our original was the Pax Dollar USDP. This is the first regulated digital asset from Paxos, and I think we're going to see some interesting partnerships launch on that asset this year as well. And then most recently, we just launched the Lyft Dollar. This is a stablecoin out of Abu Dhabi, is where its prudential regulator is located. It's going to offer daily yield that's distributed on chain with full regulatory oversight and the types of protections and safety that you're kind of accustomed to from any Paxos asset. And we're really excited about the prospects for that product. And on just stablecoins broadly, I think, and why dollars and why stablecoins is the bet for us. I think the US dollar is just the most desired financial product in the world. It's on the other side of 80% of global transactions. It's still just so dominant. And so it seems like a really easy area for us to focus and invest and improve things just like access. And there's just a lot of opportunity there. And when we look at the current space, we see, there's about $150 billion of total market cap versus the opportunity that you see in stablecoin. I think, that's only going to seem big if you look backwards, but when you sort of look ahead at some of the markets that we can open up with stablecoin, there's still just a tremendous amount of opportunity. And I think that we're just really confident that our approach in this regulated approach, this trusted approach to bringing stablecoins to new markets and giving new access is going to really unlock a lot of growth in tokenization and tokenized dollars.
Yeah, I know. I'm, really excited to see this, these developments and your focus on stablecoins. I consider stablecoins a key aspect on not just for financial markets, but for on-chain financial markets as well. A really key piece of not only like infrastructure, but added utility in the space. And it's very exhilarating to see you guys kind of really lead the charge in stablecoin innovation with regulated products like Lift Dollar and PYUSD and USDP. Very, very exciting to see. Um, Now, as you guys are pushing forward here, how do these innovations stand out in the wider marketplace, especially when we kind of have a comparative lens to the traditional methods?
Yeah, so I'll finish a minute actually talking about Pax Gold, which I think is a really interesting product from a tokenization perspective, and shows a slightly different lens on the tokenization opportunity before we go back to talk some more about stablecoins. Just a little bit of history on this product. This was launched back in September of 2019, so it's been around for quite a while. It's a crypto asset. It's a tokenized gold product that ties back. So remember I mentioned that the tokenized asset is really just a claim on some underlying. Each token of PaxG points to an ounce of physical gold that is stored in an LBMA vault in London. And so this is one fine troy ounce of institutional grade gold. There's some really interesting technical stuff with this product where like the serial numbers of the gold bar kind of attached to the token. There's like a very direct link as an allocated gold product. I think there's really nothing like it in the world. It's got a really interesting following of investors who've been with this product for years. And you can redeem it for physical gold. You can actually turn the tokens into gold bars and take those for delivery, which is really just special for that product. And when you just look at a product like that, it's just the ability to trade a PaxG token versus the ability to buy and sell physical gold. Like if you're just familiar with like fractional trading and just like online trading markets versus what you would have to do in a physical world, it's just clearly like some major advantages to being able to trade and access that product the versus the sort of like alternative of what you would trade online of just like an ETF or a future. These are like unallocated gold products. They have different costs, like management fees that are pretty expensive, different risk profiles because they're unallocated gold products. And we think this is just like a really interesting product that kind of takes the benefits, the safety, the security, the value of a physical allocated gold product and makes it digital in a pretty cool way that just is really compelling to a lot of gold investors that have invested in that product over the year. So that's just like one example. You get the benefits of tokenization, where it's on a chain, it can move around, it can move fractionally, and so on, to a product that has none of those benefits of physical gold, where it's just so difficult to do those kinds of things. On the stablecoin side, just to move back to that for a second, the one of the biggest innovations recently that I just alluded to a second ago was launching PYUSD on Solana. This is so significant when you look at I think we could probably drop the gold slide. When you look at the things that that is going to enable people to do with PYUSD. You talk about like, PayPal has integrated PYUSD as a free funding instrument in their Zoom remittances platform. Still kind of tough if you're sending $50 overseas to stomach an ETH gas fee. And so now when you can do that with a Solana fee that's a fraction of a penny, it just completely opens up new use cases and new opportunities for how people are going to be able to use this and adopt this asset. And so there's a really, on the crypto side, seemingly maybe simple innovation, like getting our prudential regulator comfortable with native issuance of the stablecoin on a new chain, on multiple chains simultaneously, getting that integrated through PayPal's tech stack, getting the asset issued on it. It ends up being a lot of work to just do it in a way that takes that innovation and is going to make it accessible to the mainstream at a scale that I think we haven't really seen. Then the other big one to call out is the one that I mentioned with Lyft Dollar. It's not open to the US, just to make sure that that's totally clear. It's a yield bearing stable coin, so it's available outside of the US. But it's a regulated product. It earns and pays safe yield on a daily basis. Basically democratizes the risk-free rate, and it's backed by the same kinds of investment profiles of US Treasuries and so on that we see in all of our stable coins. It's all disclosed online. And we just think that that's going to be a really transformational product that gets people access to dollars and yield in markets all over the world that want access to dollars. It's so hard for them to get that access through traditional banking rails. And so I think that's another really important innovation in the stablecoin space, and excited to see where that goes.
Yeah,
Um,
extremely exciting.
I would actually want to turn it back to you and specifically hear from you on kind of the Chainlink side of those types of innovations and what you think we can be doing or should be doing to create more utility, unlocking liquidity, and just really kind of moving the space forward to really use these assets.
Yeah, of course. I appreciate that, Nick. And I actually see some folks in the chat asking a similar question, so I think this will be super helpful for them. Um, let's see here. Yeah, and I do want to take a moment to thank the audience for producing these questions during our webinar today and staying engaged. But to kind of your point here, Nick, on how does Chainlink play a role? Ultimately, tokenizing an asset gets it on chain, which is a fantastic first step of getting on chain. Once you're on chain, there's only so many things that you can do without additional, let's say, services such as oracles, which is Chainlink's main focus in the market. So, just for the general audience here, blockchains have no understanding of the outside world. They don't know what time it is. They don't know the weather. They don't know what the price of an asset is, what it's currently trading at. It's just a ledger that understands the number of tokens that are currently on it, and it's producing blocks over time. Now, to actually make those tokens useful, you would need to have some sort of understanding of what's going on in the outside world. And some of the chat, some of the questions in the chat here, such as like, how do you understand the price of an asset as it's moving? Ultimately, you do this via Chainlink's decentralized Oracle network. Chainlink is, plugged in with data aggregators from all markets, and they're observing markets as they're moving in real time. And they go through a decentralized aggregation method via the decentralized Oracle network. This has a very high value in security, the way that Chainlink's oracles are designed, and we write those prices to chain. This allows these tokens to now have much more utility in nature. For example, Chainlink's price feed for PYUSD has allowed it to get listed on lending and borrowing markets such as Aave, where now there's millions of dollars worth of PYUSD being lent and borrowed on a day-to-day basis. Once you have that type of market in place, you also want to engage with other chains. So, Nick, as you called out, you guys have offerings on Ethereum mainnet. The gas fees can be quite absorbent for some folks to do business here. So you're over on Solana. Well, now you have tokens on multiple chains. What's the best way to get these tokens to each chain outside of native issuance? If you're a holder of the token, you could use Chainlink CCIP to transfer these tokens across chain and enter new markets. So once again, providing utility. How do we know an asset, or let's just say a hypothetical tokenized real estate asset, is changing in value or has kind of like a material impact? You can use Chainlink data feeds or Chainlink's proof of reserve kind of solutions, which is live today on some products like 21 shares ARC ETF, where you can kind of see the real-time nature of their holdings directly on chain. So this is where Chainlink really kind of throws our mites into it, is to take these tokens and allow them to have unified liquidity across chains, so there's not fragmented in each ecosystem, and also gives them external real world data such as price data in the instance of these tokens to allow them to be used on trading markets and lending markets. So and that's what we're really excited about, providing a high quality and security based system for. So yeah, yeah, perfect. And yeah, thank you, Nick. And as we kind of wrap up our discussion here today, what would you kind of call out to our audience members who are interested and excited about blockchain and are maybe currently working in the finance and asset management section of the industry? How can they engage deeper with tokenized assets?
Great question, and I think this is a really important one because I feel like a lot of people talk about, it's in like, especially in like the crypto blockchain space, changing the infrastructure, and then we need to. But I think when you look at the infrastructure that we're changing from, you got everything from like Swift to Stripe, basically like 50 plus years of people building solutions on top of the infrastructure that we're also trying to solve for. And it's important to keep that in mind. And I think that the only way to do this is to focus on a real use case and just focus on real customers and real customer problems. If you try to come at this and just try to like, solve an entire like layer of the problem, I think it's extraordinarily difficult to do that and actually create meaningful adoption from end customers, businesses or people or whatever. There's just so many other layers that need to work in conjunction for anything to really actually happen. If you focus on solving a specific problem and you just like take the view of the customer, then you can see through all of those layers. And you can like actually like make sure that you're doing all of the things that solve it, that bring in the new infrastructure and the advantages of it, and also like solve all the other problems to make it accessible to like a normal business or a normal person. I think an example of this, and the one that I'm most excited about, just to make that specific, is actually cross-border payments or remittances or whatever you'd call it. A stable coin, a tokenized dollar, is one critical part of that. But you need on-ramps, you need off-ramps, you need liquidities, you need FX. And in my opinion, for real mainstream scale, you need a user experience that does not feel like a typical crypto user experience. And so I think that like if you look at like PayPal and PYUSD, the stable coin solves parts of this. PayPal solves parts of this. They're going to do it with a degree of like reach and trust. And they're gonna be bringing it to partners that are not crypto companies. They're going to be non-crypto consumer wallets and fintechs and neobanks that are going to be able to integrate this stablecoin. And when you start with that stablecoin and you solve that layer, but when you bring these massive consumer platforms on, you're also able to solve all of those other pieces. And that's going to be the thing that allows, me to send $50 on chain instantly and basically for free to someone in the Philippines. And they're going to just get it right away and then have it in their wallet. And I think it's only when you like look at a really specific problem like that you can line up all the pieces and do something really meaningful. And I just think that everyone in the tokenization space needs to take a view like that, because I think those wins are going to build lots of momentum really quickly in this space. But we got to get it to a place where it's actually like making a difference for, traditional, normal, non-crypto things for tokenization to really take off.
Yeah, definitely agree. Kind of have to put one foot in front of the other before we can start really running together in this space. Um, but yeah, Nick, I had a fantastic conversation with you today. How can, if folks in the audience are interested in engaging Paxos, how do they kind of learn more about Paxos and kind of engage with your team?
Yeah, so I mean, I think that we'll definitely be sending this content out, and I'll make sure that my email address is included in it. You can obviously find me on LinkedIn. Those are the easiest ways to reach out to me personally, and or obviously you can go to paxos.com, and we have a form that you can get in touch and provide a little bit of information about your business. But would love to hear from people and find ways to partner to help distribute our stablecoins.
Excellent. Thank you so much for that. And if you don't mind, Nick, we're going to field just a couple questions here from the audience before I wrap up on my
Sure.
end. And then feel free if there's anything that's interesting to you, more than welcome to pick those up as well. So in terms of there's a question here of how to maintain the relationship between the physical world and the digital world of a tokenized asset. Ultimately, this is where Chainlink's decentralized Oracle network really plays a part into this. So as an asset is fluctuating in value over time, we're able to, provide the updated price point of this asset as it moves. So that's one on our end. And then in terms of, I see a call out here around bridging technologies. Just from a Chainlink perspective, Chainlink has something called CCIP, which is short for Cross-Chain Interoperability Protocol. I encourage everybody in the audience to go to chain.link and learn more, not only about Chainlink's product suite, but CCIP, which we consider it the most robust and highest grade security option for bridging technologies in the space, and is live on about 10 or more chains today for both token transfers and messaging. Um, is there any questions that you would like to pick up, Dick? Just kind of give me a
Um,
free shot here.
Yeah, on the bridging thing, I get that one a lot. The only thing I'll do, but I've only been on more than one chain for about 2 weeks. We're definitely working on bridging solutions, and so more to come soon there, hopefully. And so definitely excited to make some progress into that space.
Perfect.
The um There's another one that's just getting shared to me that I believe the bankruptcy remote protection is governed under the NYDFS Trust Charter. Can you tell us some of the other regulatory benefits of using that structure? What were the other structures that you considered, and what was the decision process of selecting that one? Just to talk about this a little bit, the I think that the bankruptcy remote, the segregation of assets are all really critical pieces of this. I think some other really important pieces of this are around just kind of like the accounting, the controls, and the operations of these assets. And this means having really specific oversight that the systems that are responsible for validating that the money is there before we mint the tokens. You can't mint tokens that aren't appropriately backed. Like that's something the regulators really like care about, and they make sure that we're doing properly. The ways that we're able to invest those assets. We're not able to go buy like corporate paper or like invest them in Bitcoin or anything like that. There are really specific controls around what types of investments we can make with those assets, how much exposure that we can have to different kinds of risks with those assets. And I think those are also really, really important protections to make sure that these assets are safe. The On the other structures point that I would just say, the specifically actually though I would answer outside of the U.S. The stablecoin USDL that we just launched a couple weeks ago is prudentially regulated by the ADGM outside of the U.S. We've also previously received an in-principle approval from the MAS to issue a prudentially regulated stablecoin out of Singapore. And I think that we're always actively looking to innovate with new regulators and see that as a way to really improve and move the market forward by bringing new structures to new markets that allow us to do new and interesting things.
Yeah, I think that's really great. And then I see another one here that might be interesting for you. Why would somebody be choosing PaxG over an ETF product?
I think that there are really two reasons to do that. That assuming someone is kind of like a gold investor, from the premise of this question, I think one, I would just look at the cost profile of an ETF and the management fees versus the cost profile of PaxG, which doesn't have a management fee. And over a certain time, there's just going to be price advantages to it. The other would be the soundness of the backing. Like I said, this is PaxG is backed by allocated physical gold that is you have a claim to in a vault, and that just changes the risk profile of holding an ETF is essentially like a claim in the same way that a token is a claim, and they're just claims to very different things. And I think that's a really important factor to consider.
Beautiful. Thank you for that. And I think one last thing here. I'm seeing an ask of how can somebody participate with Chainlink. Please head over to chain.link, and there's a contact form out there. This is where you can, offer data services, also learn how to use Chainlink products today, such as our out of box oracles, such as Chainlink functions, which can be stood up and maintained by anybody. So, but yeah, thank you so much for your time today, Nick. Anything else that you'd like to cover while we have
No,
each
this
other?
is great. Thanks so much for having me, and really appreciate all the questions and the engagement from the audience. This has been really great, and I appreciate it.
Yeah, thank you so much for your time today, Nick. And thank you everybody who joined the webinar and your engaging questions. So, all right. We'll see you again soon, Nick.